Hey there, savvy investors. Mr. Ernabach here, your seasoned investor and storyteller extraordinaire, back with another deep dive into the world of dividend stocks. Today, we're going to explore how you can become a landlord with just $50 by investing in REITs, which are real estate investment trusts. These investment vehicles allow you to earn rental income without the hassle of property management and can bring some serious cash flow to your portfolio in 2024. So, before we dive into the specifics, make sure to smash that like button. Let's see if we can hit 1,000 likes on this video to keep the content coming. Oh, and if you want more videos like this, drop a comment saying investing below. And for a free dividend tracker tool, check out the link in the description. It's a game changer for tracking your cash flow. So, why consider REITs as part of your investment strategy? REITs offer several advantages. They provide high dividend yields, potential for capital appreciation, and diversification benefits since they invest in a variety of property types. Plus, they allow you to invest in real estate without the significant capital outlay and responsibilities of direct property ownership. Now let's get started with these high-yield REITs designed to keep your pockets lined with dividends all year round. First up, Federal Realty Investment Trust, ticker FRT, offers a solid dividend yield of around 4.31%. Now, Federal Realty has been a standout in the REIT world, especially known for its high-quality retail and mixed-use properties. Despite the challenges in the retail sector, FRT has managed to maintain strong occupancy rates and robust cash flows, thanks to its strategic locations and diversified tenant base. With its current stock price around $101.09, it's a REIT that's well-positioned for growth as the retail sector rebounds. Next, we have Universal Health Realty Income Trust, ticker UHT, with a dividend yield of about 7.72%. This REIT focuses on healthcare facilities, including hospitals, medical office buildings, and rehabilitation centers. Given the growing demand for healthcare services, UHT offers a unique blend of stability and growth. Despite some headwinds in the healthcare sector, UHT's portfolio of long-term leases ensures steady rental income, making it a reliable choice for dividend investors. Its current stock price is around $37.56, providing a good entry point for long-term investors. Our third pick, National Retail Properties, ticker NNN, boasts a dividend yield of 5.39%. National Retail Properties is another powerhouse in the retail REIT space, with a portfolio of over 3,000 properties leased to a diverse range of tenants. The key to NNN's success lies in its long-term triple-net leases, which place the burden of property expenses on the tenants, ensuring consistent and predictable cash flows. Currently trading around $41.92, NNN offers both stability and a high yield, making it a top pick for dividend-focused investors. Then there's Essex Property Trust, ticker ESS, which offers a dividend yield of about 3.73%. Essex focuses on residential properties, particularly in the high-demand markets of California and Washington. Despite the high costs and regulatory challenges in these areas, ESS has consistently delivered strong performance, driven by high occupancy rates and robust rental growth. With its current stock price around $262.94, Essex Property Trust provides a unique opportunity to invest in the booming residential market while enjoying a steady stream of dividends. Finally, let's talk about Realty Income Corporation, ticker O, the monthly dividend company, with a yield of approximately 5.74%. Realty Income has been a staple for income investors, thanks to its track record of 125 consecutive monthly dividend increases. With a portfolio primarily composed of retail and commercial properties, O has weathered the storm of rising interest rates and is poised for a strong recovery as the Fed begins to cut rates in 2024. Trading at around $53.72, Realty Income is a reliable source of monthly income and long-term growth. To wrap up, each of these REITs offers a compelling blend of high yield and growth potential, making them excellent additions to any dividend-focused portfolio. Remember, Successful dividend investing requires not just picking high-yield stocks, but also monitoring their performance. A good dividend tracker is essential. Check the link in the description for a free tool that I personally recommend. If you found this video helpful, please give it a thumbs up and subscribe to join the proactive investor community. Hit the bell notification so you never miss an update. And don't forget to leave a comment with investing if you want more content like this. Stay tuned for more insights and tips on building a rock-solid dividend portfolio. Until next time, happy investing.